just remember at first being intimidated by the process, and then they just tell you to go all out and just like click everything.
Of course they do.
All right, we're going to go ahead and get started. It's 2:05. Hopefully everyone's joined us back online and can still hear us. With this, we are going to start a conversation and or hear a presentation, I should say, on the Bulletin 2025-03 service contracts. Again, we're going to start with just a high-level overview of where we are to date with this and our previous discussions, and then we're going to turn it over for a presentation. We'll then open it up for public comments online after we have any questions in the room. Dean, if you want to give an overview.
Thank you, Lori. Like I said about an hour ago, we're here for service. We are here for service contracts. Again, we encourage everyone to read the bulletin. It's posted on the website. It's 2025-03. But practically, in a very general terms, it's regarding what the department noticed in certain filings about insurance, traditional insurance contracts, including coverages that could be falling within the definition of service contracts, quote unquote, warranties. And without following that regulation, those lie under a separate regulation, separate article, and that's why the department issued this notice, and it provided some time for the industry to come into compliance from our perspective, and also to engage in these types of conversations. So hopefully we can come up with a collaborative resolution to this. This is the third meeting, and we have a presentation, and I think we can just jump into it.
So if you all want to introduce yourself and who you're representing, and then we'll introduce the DIFI that's in the room, and then we'll get started.
I'm Mark Osborne. I'm here with QTAC Rock. I represent Hartford
Steam Boiler Inspection Insurance Company.
It rings off, as well as a number of other PNC carriers. And I think Jen and I were recruited from the PNC industry to be the presenters, and then we recruited Michael, who heard the weather was nice in Phoenix and wanted to come out for a trip. Michael, you want to introduce yourself?
I'm Michael Wayne, Regulatory Counsel at HSB. It's easier to say it that way. We work with a lot of client companies on a reinsurance basis with a product that fits within at least the current interpretation, and we have questions and want to seek the guidance of the department about how it should be going forward. So I'm here to provide color and provide any insight I can.
And he's kind of the product expert. So to the extent to me, these products are kind of kissing cousins, and he can kind of describe differences. We put together a nice chart that describes some of the common differences. Obviously, there's some more nuance to that, but to the extent that you want to have that dialogue, we can have that as well. And then Jen, you want to introduce yourself?
Jen Cram at QTAC Rock, and working with all of the companies that Mark mentioned.
So just to clarify, Mark, you mentioned that you guys were representing the other PNC companies. Yes. Are those ones also like specifically being represented during this presentation, or what did you?
We have kind of a broad Friday group, and we're the ones picked to kind of lead the general industry consensus on this discussion. And if some of them are our clients, some of them are not, but Nationwide, Geico, Farmers, who else, Dan?
Chubb.
Yeah.
Farmers.
Yeah. Those are
American
our
Family, Allstate.
Yeah. Those are our core clients.
Okay, thanks. And then, so I'll introduce myself, Foster Burrell, Legislative Liaison for the department.
Lori Munn, I'm the Deputy Director of Insurance.
DNO, also Financial Deputy Director.
Maria Aylor, Interim Director.
Thank you. And with that, Mark, if you want to go ahead and kick it off.
When we go to the first slide. So I think the general theme of our presentation is you can have insurance products and you have warranty products, and the two can coexist without causing problems. And if there are issues, I think there are nuance can probably, and we'll get to it in the end, handled in a different way. Michael has experience, and his products are filed in all 50 states. Some of those states have warranty laws, some have no warranty laws. Some of them are not dual regulation, but kind of independent regulation.
Yeah, but that's what we're saying. In every state, we have a filed product that is baked into a homeowner policy, It fits a specific need. It's the equipment breakdown exclusion that's basically in every homeowner's. This product is intended to be the home version of equipment breakdown. The warranty has very similar characteristics on certain issues, typically has a different feel to it, different size. So that has existed in every state for, I don't know how many years, but it's been existing and coexisting without much fanfare and much consternation, as far as I can tell.
So next slide. I think from our perspective, sorry. So the statute gives us very broad authority to regulate risk. And we underline the keeper against any loss or damage for any or all hazards or cause. It doesn't say it has to be an external damage. It could be wear and tear. But we have that authority. We may choose not to cover everything, or the ISO policy may focus on others, but it does not limit us to cover things that are just in the ISO policy. And so we believe we have very broad authority. So whether it's the core definition or the miscellaneous insurance definition, that reinforces that. Insurance against any other kind of loss. That seems pretty broad. Damage or liability properly a subject of insurance, not within any other kind of insurance. Warranty is not within any other kind of insurance. So we have very broad core authority on the property side to offer these type of coverages. Next slide. Similarly on the auto side, from any hazard or cause resulting from an incident to ownership, maintenance, or use of such vehicle. So very broad coverage. And it seems like most of the issues you see more on the homeowner side, because the offerings on the auto are I think fairly limited. You know, roadside assistant, theft or loss of key fobs, you know, but we again, we have very broad authority to write risk. And we do not see the underlying service contract statute as saying this is the only way to regulate. We are given authority to regulate these type of risk if we so choose. Next slide. You know, going back, you know, the service company laws basically date back to the 30s, but at some point, you know, mainly on the service contract industry, they desperately did not want to be regulated as insurance companies. And so they developed the Model Act, and the whole idea was that you could have potentially two ways to regulate the product. And I think the key thing from our perspective, as long as the product is regulated, either as an insurance product or as a warranty product, I think the key there is the consumer is protected. They're more protected in our view on the insurance side because the protection laws are so much more aggressive and in favor of the consumer compared to the warranty laws. So you would think there'd be more of a bias to drive things more into the insurance side. But the warranty contracts are very, very popular. Not all states regulate warranties at all. Some of them are completely unregulated product. I think you said Louisiana now regulates them, but you just file with the
You
Secretary of
register with
State.
the Secretary of State, and there is no other regulation of service contracts.
Well, and they get regulated in different places too. So.
Yeah.
Depending on the state and the covered product, you may find some regulated by the insurance department, some by a Department of Consumer Goods. So there is wide variation among the states about how service contracts are regulated.
And Arizona was ahead of the game even before the NAIC Model Act in adopting our own service contract. And for years, these products coexisted. It just depended upon what channel you want to purchase that type of coverage or protection. And there's differences that Michael can talk about. Now, the next slide I think is very important. When the agenda that for effect, it's so important. I direct you to point B. When the legislature did the Service Company Act, they made it clear that this Act does not limit the rights or authorities granted to an insurer. So they specifically said, if you're a warranty, you have to be regulated. If you're an insurance company, you still have the authority to act. We're not taking away your right as an insurer to offer these products. You have, if it's not a warranty, it has to be insurance. You have to be one or the other. And they made that very clear. And I'm guessing the reason why they did that is to make sure that the insurance industry would say, wait, you're not taking away products out of the market currently. We want to protect what we have. And that's why that provision. So you read these provisions together, we believe it makes it very clear that the legislature did not intend that service type contracts can only be offered as service under the service contract. They can be offered as an insurance product as long as they meet the statutory requirements of insurance.
Yeah, and so this section in particular, from my perspective, gets that sort of existential question. Can an insurance company offer a product that fits and covers things that are similar but different than a service contract? I think the answer is yes. I think every state has seen it that way, and every state has allowed a product like this to be offered in an insurance vehicle, either home or auto, and has not seen any reason to deny the insurance companies the ability to offer this fully integrated product in a fully integrated way, whether it's homeowners or auto, as opposed to, which I think is sort of one of the big problems I see with how this might go, is now you're going to bifurcate the process. You're going to end up with someone having to get essentially two different carriers, two different entities to deal with on things that they might naturally suppose were going to be covered under their homeowners, or naturally suppose we're going to cover under their auto. And now you're going to drive this second party into there. So I never saw the statute as creating this sort of existential question that you couldn't do it. It just said, follow these paths if you're going to do it.
Yeah, and I think the service contract was also designed more to make sure that they weren't misrepresenting those policies as insurance, because there's an inherent belief that you get all the protections when really it's a warranty contract. So this is, you know, whether if you popped up at GERC or any other issue, if they looked at this, this is, I think, the key indicator that the legislator's intent was to keep a bifurcated system. And we could talk about if there are issues associated with, you know, consumer complaints or other, and hopefully if there are, we get some feedback. Then maybe there's things that we can do in the insurance code to lessen some of those regulatory issues that you're seeing on the consumer side. Because we're very interested to hear what those are, so that as an industry, we can remediate them.
And I don't want to jump the gun, but that to me is sort of the critical point here is what is the department thinks it needs to solve for? Is there a better way to do it that still allows for the statute and what's allowed for it to exist, carriers to do these things on a fully integrated basis, while still addressing the concerns that may have popped up? I would point out, I haven't seen this arise in other states, not that it hasn't arisen here. I'm just saying it'd be easier to address it if we can understand what the department's view was, what was causing this agita, if you will, angst out there.
And it's historically, in my experience, that you see more complaints on the service contract side than you do on the insurance side. Yeah, I think this is just kind of a reiteration of the definition, and I think this reinforces the point that these products are kind of kissing cousins. They cover very similar areas, but Michael can always point out later on where there's some differences in the insurance side, where the coverages in some cases are much more robust, and other cases more limited. And we have an additional slide that talks about that. But the core point is the legislature, we believe, made it very clear that.
Let me just throw in, so I believe you have, it's a chart that
Yes.
you submitted. So while there are similarities, I think there are some big fundamental differences. In the home systems area where I deal with mainly, there are things like if you're out of the house for a while, expedited expense, things that don't come into play in a service contract. They're not designed for that. These products, which are integrated into an existing larger policy, whether it be the auto or in my case, the home, there are attendant benefits that come along with that structure that just don't come along in the service contract model. And so that's where, yes, there are things that might be similar, but there are wide differences in that chart. And I'm not trying to go through the whole chart, but that chart is supposed to highlight the issues that you might see as differences.
Okay, next slide. So, I think they're very similar products, but I think there's some very key differences. And the key point is, at least naturally, we've seen them coexist without much problem. We don't see a lot of legislative fights where the insurers try to carve out the warranty time, and they fight to take market share. There's really been kind of a detente between the two, and they just kind of coexist. And one thing I know from Jen, and she still represents part of the industry, but the one thing for the service industry is they just want to make it clear they're not insurance. I mean, they probably don't even like being in the Department of Insurance because it's insurance adjacent. I think one of the key things is they're sold in different channels. Insurance products are sold through licensed brokers. There isn't that same type of consumer protection in terms of licensed folks on the home warranty. My kids like to say, hey, I want to get my car warranty from Ice-T now. Ice-T is the big marketer. We don't do that in the insurance area. It's a different channel. It's a different type of product, which is fine. One is marketed to a different kind of approach. The warranties tend to be sold through realtors. They send people to third parties, car dealers. That's whereas we're very regulated and stringent, very protected. Doesn't mean they can't coexist, but they're very different. The equipment coverage we see is a natural core addition to the insurance policy. The ISO policy doesn't cover everything, but you may want one-stop shop that covers some additional items that you would like to have covered, especially if you have high-end appliances, especially if you have things of that nature, that would be a nice add-on to the type of coverage that you have.
And I can't speak for the auto side. I don't play in that space, but at least on the home side, the major differences are higher limits, the way it's covered, the full integration with the homeowner's policy. It is a different way of getting what you want as opposed to dealing with an alternative contract and figuring out where do I belong. You're dealing with one policy, one coverage document, the limits are integrated. So I think it's just a different way to think about what you're trying to do. And to pull this out is going to leave bare this exclusion in the homeowner's policy about basically equipment breakdown in the home. It's going to take away this product that fills that gap.
And I think one of our concerns is if we now say one of my clients wants to offer this coverage and is now going to be required to be licensed as a service contract, and they're buying it, let's say from a Nationwide, they're going to assume that that is an insurance product. I think it's going to create more confusion because the brand of Nationwide, whereas it's very clear when it's being sold through that channel now, that is an insurance product, that you have those protections, that it's handled through that same broker, all those kind of key focus. I think it's going to create, it's sold by my insurance company. Well, technically it's not insurance, it's service contract. Well, what does that mean? That creates more confusion rather than less. If one of the issues that we're hearing is folks are buying the same coverage for the same equipment through two different channels, or you did a Venn diagram, there's some core overlap. The better way to fix that issue is to require more disclosure or figure out ways like, and I think those are ideas that we're very open to as a broad industry. Different complaint processes. I mean, the non-renewal process is much more stringent on the insurance side than it is on the service warranty contract. And the marketing client communications are regulated differently. For the most part, much looser on the service warranty contracts. Next slide. A couple of key issues. Insurance consumer protections you can see here are much more robust. I think one of the big differences is you have the choice of repair and service providers in the insurance context. Generally, you do not in the warranty area. They tell you who you get to use, and it's very prescriptive. We have much more robust solvency requirements. They have some very broad solvency requirements. They're not really solvency requirements, but they're capital requirements. So much more protective. Claims on the insurance side are subject to Unfair Claims Act, bad faith claims, all the traditional tools that insurance companies or consumers can use to hold insurance companies accountable, much weaker than on the consumers on the contract consumer protection side.
And plus the department sees all these from an insurance perspective. You see them as they get filed and approved. So these are not something that's just existing out there in space. They've been reviewed and seen by the department.
Yeah. So I think if from a public policy perspective, you want to be more protective of consumers, you want to lean or guide people more on the insurance product side. But I think the legislature has kind of spoken and basically said, we're going to have two approaches for this coverage area. Pick which one makes the most sense. One's less regulated, one's more traditionally regulated. Now, a couple things that if we have to retrain, refile, create all new products, many of these coverages are very ancillary coverages. So they're not your core homeowners, they're add-on coverages. So a lot of insurers, probably what you saw in the filings, are like, well, we'll just pull out of the market. Or some of those, just the new short-term regulatory costs could increase the cost of some of these products because we'd have to potentially form a new company that meets that requirement that, all those type of things. And a lot of companies will say, not worth these coverages. A lot of these policies that you provide for carriers are included nationwide. And so Arizona would be the one state that you can't get those coverages. Typically we see California, New York being those outliers with some of those coverages. Consumers could be required to potentially purchase more coverage than they need because they have to get a full warranty, or when they may only want one piece of equipment or smaller, which may be more flexible. Clearly less convenient for consumers who just want to deal with an insurance contract and not have multiple coverages. And then, obviously you lose some product efficiency when the coverage is spun off. One of the ways that you keep these ancillary coverages affordable is they're sold as part of a bigger package. And I think on the auto side, a lot of these coverages are really seen as convenience coverages for consumers. The idea of, I think everyone expects now that their auto coverage to have roadside assistance. It's become a natural thing to say, well, maybe we'll cover that, maybe we won't. Or, key fob coverages. One thing, if it's stolen, yeah, that would be covered. But if you lose it, that doesn't make a whole lot of sense in our mind. So I think bifurcating all these out, I think is more problems than it's worth. So now here's, we always assume that there's a consumer reason why you've gone down this approach. Either receiving consumer complaints, or maybe it's just a very strict reading of the statute that we need to go to and modify to make sure you're comfortable with the dual regulation, although we very much don't think there's a need. But if some of the consumer issues that you're seeing, increased transparency, I think one of the things that we heard informally through some of the stakeholder meetings was, we want to make sure the consumers aren't buying the same product twice. And so let's figure out how do we do that in terms of consumer notice. Those are things that we can do. Make sure that they're fully aware of the impact on underwriting and things of that nature. The other issue we heard is, I want to know what I'm paying for. And so do we need to have an endorsement for these type of coverages in this one category? And how do we write that so it doesn't, create problems for other types of coverages? So those are the kind of ideas that we'd like to have a dialogue with the department about, to say, if these are problems, then let's roll up our sleeves, figure out how to do that. I think the idea of separate endorsements, as long as there's enough lead time, is an idea that I think makes some sense. Transparency, if we know exactly what that is. I know it's hard to get consumers to actually read their policies, but are there things that could make some sense? We're open to that. But just say, hey, we're going to take these just completely out of the market. I don't think is the right direction, and that's our suggestions. And with that, I'd be happy. Oh,
And to Mark's point, if the issues are transparency, knowledge, things like that, it should be in a conversation. It shouldn't be just this complete evisceration of the ability of insurance carrier. It's covered. Say it has to be done this way. It seems to me that the consistent path all the other states are following is apply the insurance statute rules, do the filings, approve them what they are. If there are things about, again, the notice, the endorsement thing, those are questions to get at with the department, but in the context of an insurance policy, not in the context of it has to be on a service contract. So to me, the fundamental question that I think the department's dealing with is, do you existentially want to get rid of this as an insurance product? I would hope the answer is no. I think it's going to be a deprivation for homeowners of their ability to get what they really want and force them into this other space. And so we would willingly work with the department on addressing issues, topical issues, but not just the wholesale removal of it.
so with that, we'd be happy to entertain any questions unless Jen, you have something to add.
Any questions in the room from the DIFI at this time? Do you have anything?
I guess the one question is from a statutory principle interpretation, right? A more specific and recent statute trumps usually a more general statute. And I think your presentation was, we have broad general authority. How is that position not in breach of these principles of?
I think it's the provision in 20-1095-10 that specifically says that nothing in these service contract laws that we are enacting impair, limit, or inhibit any existing right of an insurer to continue to conduct its insurance business.
Because they would have notwithstanding
Right.
that section or eliminated that section.
That is an outlier. That provision is not included in the NAIC model. I have not seen it in any other state service contract laws. I would argue that, the legislature means what it says in every statute, every provision in a statute is intended to have a meaning. Means that when this legislature put these laws on the books to create and authorize service contracts to be offered, they did so mindful of the fact that service companies were going to eat into insurance market share by offering an alternative, less regulated, less beneficial product, arguably less beneficial product. They wanted to preserve the right of carriers to be able to offer insurance on the same underlying coverages or products through an insurance policy rather than having to only do it through a service contract. So I think 20-1095-10 specifically negates we've just looked to the more recently adopted statute that's more specific because it has that carve out.
And I believe that the more recent statute was done to make sure that truly unregulated entities were not providing warranty-like, service-like contracts. And when they would get complaints, they'd have nowhere to go because they weren't regulated as insurance and they weren't regulated as warranties.
Absolutely.
Yeah, I just wanted to touch kind of back on the point that and I'm glad you brought it up at the end about the transparency, because we know at the end of the legislation, this was something we discussed about whether these were being embedded within the policy, right, or sold as optional coverages as a rider or an endorsement. And so, yeah, I think you did kind of get into, I guess, even though the bulletin is really more about a licensing issue, what could be seen as a consequential issue, what would misrepresenting what's in a policy, misleading to consumers. So could you kind of, I guess, go more into that a little bit more, where the consumer is buying a product that they don't know that they are paying for, something that's in there that they were, essentially not aware of.
Yeah, no, I think that's legitimate. If there's cases where that is occurring, then that's where you raise that in the product filing. You suggest that there should be an additional endorsement. If that's the area you want to get into, that seems to me to be the regulatory, the regulatory path. So if you think that policy, what I don't know, because I'm not privy to some of these and I think particularly in the auto, is roadside assistance one of those coverages that it's viewed as a sweetener for the company because that's what consumers expect, and they're not really building that into the rates. Maybe they are, maybe they're not. I don't know. But, so you might get some of these coverages as just kind of add-ons because it makes the consumer feel better. Others, there's a premium attached. But what I think is not an unreasonable approach is to say, then because these are also covered in another type, then let's require that these be covered under a specific endorsement so it's clear, and then they can be called out differently on the deck page or something of that nature. I think that's the approach, and I think we're very open to going down that path, but we want to make sure we're fixing a regulatory concern you guys have before we went on that path.
And I guess I have a question about the nature of your question, right? If the department has concerns that an insurance agent or a carrier is actively misrepresenting what's in a policy, so is your question, insurer A provides roadside assistance, charges the premium, and is telling a consumer they don't have it? I think that's,
It's a matter of omission, not of necessarily saying that you don't have this coverage.
so is,
Assistance is often an optional coverage.
Yeah.
What I'm talking about here is coverages that in the contracts I've gone through, which I have, are specifically to auto, since you brought up auto, are included within the comprehensive section of the auto policy. Whereas, I think a general consumer, right, would not necessarily understand that that would be included within their comprehensive coverage, especially if they're doing direct writing.
So let me make sure I understand the concern. So you have a coverage that is broader than what you would typically think comprehend. Maybe if you have an example, that would be great. That's broader than what we would normally think traditional comprehensive. They may not know about it. They may not know they have the ability to access it, so they may never use it. And so they're paying for something they didn't know about. I'm trying to get.
Yeah.
Is that the issue?
It's not necessarily that, I'm trying to say, because the bulletin is specific to the licensing issue that we have with
Yeah.
the contract, but you did bring up the point about transparency and potentially having to do a rider or endorsement versus embedding it within the policy. And I think that we had discussed in previous meetings of exactly that same subject, right? Because at least within the service contract, it tells you, I know you kind of talked about the differences there, but they have to tell you what the cancellation provisions are, and that's all within the policy. Here, something again we kind of discussed was that there was a question about the utilization of that, how it affects them, and again talking about the transparency you were mentioning to consumers from a regulatory standpoint that's not related to the licensing issue. And
Right.
we're going to discuss this.
Yeah.
Is making sure consumers understand if it's embedded or not, that those coverages are there, how to use them, what happens if they use them right, because generally, I think consumers should probably understand that claims are going to impact their premiums,
Yeah.
whereas.
If it does or if it doesn't, yeah.
Exactly.
I think there's two ways you can handle that. Is in the filings, you can say you're not being clear enough for these, I'll call them non-traditional comprehensive coverages. And we want more disclosure, or we want to make sure you clearly articulate. That I think be handled on a policy basis. If you want to do something more global in a statute, we could probably figure out what that looks like and just call out those specific ones. But I think you have the tools in the toolbox, or we can make the tools in the toolbox. We're not. I think as a general provision, the industry believes, hey, if you have a coverage, you should access to it. You should know you have that coverage. I hope that companies aren't adding on coverages and not telling folks, but maybe that could be clearer because they're not traditional coverages. I don't think there's a nefarious from the companies, but, you know, I'd be interested to see what some specific examples, and then we can figure out how to regulate. Jen?
On the flip side of that, I just want to sort of be cautious that we're not going unnecessarily too far down a path, because I think, right, established case law makes clear that insureds are expected to read and understand their policies, and if they have questions, to ask their agent or carrier. And, you know, I've reached out to an agent to get quotes for potentially switching my home and auto, and an agent doesn't necessarily walk through every single specific nuanced coverage that's included in a policy. And I don't think that that is required for a traditional policy now, right? Like your agent, when you're buying health insurance, doesn't have to walk through your entire summary of benefits or every single thing that's covered and how much. So I think I appreciate that the focus of the bulletin is on whether an insurance company needs to get a service company permit and offer these coverages through a service contract rather than through an insurance policy. Hopefully our presentation on that point and how the rest of the entire country looks at that issue, and the fact that Arizona specifically recognized that nothing was meant to inhibit carriers' ability to continue writing insurance, satisfies the department on that question. I think we're trying to show that we're operating in good faith, and if there are pain points or issues where we can do a better job, that's something that definitely industry would be happy to talk to the department about. But I just want to be careful, because again, I don't think anybody expects today that if I'm a consumer talking to an insurance agent, that the expectation is that the agent is going to read out to me every single exclusion and every single thing that's covered in an insurance policy in order for me to be bound to be fully apprised and made a reasonable knowing decision about the coverage that I'm buying. Because I don't think that that's the case. So I want to be careful about how far down a path we're going on the consumer education notice piece.
So instead of getting too deep in the weeds on this, because I think, as you noted, there is a little bit of a focus. So I think we table this and bring this maybe into the next discussion.
Yeah.
After we've had some time to review the presentation and what you all presented. I think that would, just for lack of time too.
Absolutely.
And not get into a huge debate about it today.
Okay.
You all are okay with that?
And receive comments.
Okay.
And if you have some specific examples, just, you want to kind of get us down that path, and that will help us noodle on it before.
Yeah, and I think, the point today, we knew we weren't going to solve the issue, but it was a time to hear everything and kind of be able to disseminate all of this and think about it, everyone online and in the room. So with that, any other questions from anyone in the room, from industry in the room? Any questions? Are there any questions or comments online from any folks? Again, we are going to have a written comment period for Bulletin 2503. You can submit your comments to the email address that will be shown shortly on the screen. Be sure to reference in the subject line of your email that it's regarding Bulletin 2503 and the contracts in the subject line. We do want all written comments submitted by 5 p.m. on September 11th. With that, that's kind of the date we'll use to set any next meetings up after that date. So we have time to review any written comments that have been submitted. Any closing from the panel before we close out? Any further comments?
Well, we appreciate the opportunity to comment. If there's any other states or specific things that you need us, feel free to use us as a resource. If you have any questions in the interim, or examples you want us to use, so in our next meeting, we can keep it up.
Thank you very much for the time and appreciate
No,
it.
thank you, and I appreciate you flying all the way in. So with that, thank you again, presenters, folks online and in the room. We'll